Hey Ross World, my money makes money, and today I'm bringing you a new investment app. It's called Wealthsimple. Not to be confused with WealthFront. It's slightly different, but it is a robo-advisor app, and that basically means that they don't have a brick and mortar. They're simply online, and they offer some really good features, and you can mix and match this with the other investment apps. So what am I talking about? Wealthsimple is a robo-advisory investment app that originated in Canada, but it's offered to the US and Canada. So thank our mates up in Canada for offering such another investment app to us, okay? So they have some good features, but I'll tell you the pros and cons. But let's just learn a little bit about it before we go strictly to the pros and cons. Now, as I stated before about how to mix your exchange traded funds and also your index funds in this video right here, you will see that I went out and I actually was searching for something and I found it through Investor Junkie and also Nerve Wallet. Wealthsimple is offering those ETFs mixed with those low cost index funds, okay? They're using mostly the Vanguards, which I told you to look out for. Those are really making good money and consistently, whether it be a market drop or market rise, they have consistently been making good money. I mean, take for instance, Vanguard, a 4-point-something trillion company. Now, what I like about this is it offers your basic features like automatic monthly payments inside your investment account. They also have what they call auto rebalancing, and that's when the market is moving in a particular manner and it rebalances your account to give you the best possible returns. It also has your tax loss harvesting. You can look that up. I also have a video that I briefly talk about that, but you can also look that up and just get a quick definition of that. Also, they have dividend reinvesting. Now, I know some people may want to take out those delicious dividends, but my advice would be to reinvest those dividends, and that's when you have compounding dividends. I also did a video that you can reference right here about compound interest, and I also mentioned compound dividend. Now, as I always state, there is some risk when you are investing, but by them doing auto rebalancing, auto reinvesting dividends, it really lowers your risk. And now we're also talking about these really low risk funds. Now, as I stated before in another video, how these index funds mixed with ETFs survived so many people through the recession of 2008 blending into 2009. A lot of people were still making money. Now, not at astronomical rates, but still up to a point to almost 1%. Now, granted, think about it this way. The stock market was losing 20, 30, 40, 50%, and some people were still making almost 1%. How do they do this? Two main reasons. Some experts in the game were hedging their funds, and I'll get into that in another video because that's a whole nother ballpark. But look at it as insurance for your stocks. But you don't really make that much. It's kind of tricky there, and I'll try to explain it then. But they also invest into index funds, a mixture of those ETFs, okay? That's why I was saying that I like ETFs better than mutual funds, because they have a really good mixture. Now, the simple thing about Wealthsimple is they offer 3 types of portfolios. It's not like Stash where you have all these particular different portfolios you can go in and it actually lays out which companies they actually invest in. Or it's kind of like WealthFront in the sense of it's going to give you how many stocks that you're investing in and how many bonds. But they break it down in a sense of comparable to Acorns, because Acorn gives you the conservative, the moderately aggressive, and then the aggressive. And this particular one is basically conservative, balanced, and growth. Those are the 3 names. And I'll tell you how it's broken down. So conservative is broken down. 65% of the money that you have going into that particular portfolio is your stocks. 35% are your bonds. Now, your balanced portfolio is basically a 50-50 split. 50 stocks, 50 bond. And now your growth, because now when you talk about growth, You increase your risk because we know the majority of your money, if it's in bond, is safe because once again, bonds is a loan that you gave to a company through your investment company, okay? That's basically what a bond is. They're going to give you your money back with 3 to 4% interest. So on your growth one, it's 80% stocks and 20% bonds. So now that we beat that all up, let's get to what you really want to know. The pros and the cons, okay? So the pros is, even though it's a robo-advisor, it still has live support. You can actually call in and or email them for advice, okay? That's a huge plus. That's a huge bonus because people love talking to people. You don't want to deal with no robo or no algorithm that some scientist or so mathematician made up. You want to talk to a real person about your money. I totally understand it, guys. All right, second, and this is the big difference, not to be confused with WealthFront. Don't forget, WealthFront has a $500 minimum deposit to open your account. Wealthsimple has zero, zilch, nothing. So you can open your account with Wealthsimple. You don't have to deposit any money, okay? Now, with WealthFront, and I know this is a slight comparison, but this is not a comparison video. With WealthFront, even though you open your account with $500, they don't touch your money or charge you any fees until your account reaches $10,000. Now with Wealthsimple, your account is free up until $5,000. Then after that, they charge you a whopping 0.50% on the money you have in your account annually. Now, consider everybody else in the game, like Stash. If you have under $5,000, Stash simply charge you $1 a month. Now, if you get into the promo right now for Stash, you can actually get 2 to 3 months free. Now, that's only $12. Once you reach over $5,000 with Stash, then it's only 0.25%. That also goes with Betterment. Betterment is only 2.5%. So Wealthsimple is actually doubling that amount. But hey, this is my advice because you can get in the game and you can use all these different avenues of diversification for your money to make money. Get into Wealthsimple. Free, they're going to auto balance your account. You're going to make some money through your low cost index funds and also your ETFs. Then as you start to reach $5,000, stop, hold, wait, withdraw that money, put that in WealthFront. And as you see the WealthFront video, you can reference that right here. That has lower fees than Betterment all the way until you reach $2 million. So you can use that route too. Some people say, hey, should I use Stash? Should I use Acorns? Should I use Robinhood for individual stocks? Don't forget, Robinhood also does index funds as well. If you don't want to go through these other entities, you just go right in like you want to do Vanguard, VOO or VEU. They have all these different codes depending on the stock market, okay? And they mimic and they actually track the low-cost index funds of the S&P 500. I know that's a mouthful. I have some videos on it. Just watch them and I explain it. You know me, plain and simple. So you can use all these different avenues so you can end up paying what? Nothing, okay? Now, eventually you become a millionaire, you're going to have to pay something, okay? And hopefully we all get there before we freaking die and before we're crippled and before we're sick with all the ailments. We actually want to enjoy all this money that we're working our butts off for. So check out Wealthsimple. I have the link in the description and you can actually go on their website, fiddle faddle with that, open your account, but I think they direct you to their app. But right now, and I'm going to leave that in the description as well, through Investor Junkie, if you open up an account and you fund it, they don't really say how much. I mean, you can fund the account with $5. They're going to give you $50. So I'm going to actually sign up and I'm going to look at the stipulation. I'm going to read the fine print just to see, because this is free $50. Okay. Now they're thinking most people are going to stay with it, but money is money. They're going to give away for free because I deposit $5 and I got to wait 3 months. That $5 is nothing for me if I'm going to gain $50. And at the end, I made $55. Well, no, I made $50 off of $5. But you get what I'm saying. So check it out. Links in the description. My money makes money. This is Ross World. I'm out.